of the technical analysis on the and that's cool. We've got this huge wick over here, which I'm going to just put down as a printing error, or indeed some sort of, you know, we're going to discount that in terms of looking at this thing. I can see that we obviously trended up for this, you know, its initial lifespan. But for people who've watched the whole show, I've got a little quiz for you at this moment in time. One question, you should be able to answer this one because it's, you know, directly relates to the last time, the only other time, right, that on the show that I did a little quiz question for anybody. What did we think could be the outcome of this movement up the way here? At this point, moving up the way, looking at this and seeing the upward sloping top resistance line up above us, and this upward sloping support line below us, but the two of them slightly diverging, what would be a reasonable target off the back of one of those shaped patterns? You've got 3 seconds to answer. 3, 2, 1. Well done. You're right. Exactly right back here at the starting point. So what you actually had at the start of rep over here was this ascending, broadening wedge. Now, what does the textbook say your target is for it? Right here at where we started, and as you can see, that's where we came back down to, found a bounce, went up, and then went on down the way thereafter. I hope you find that this sort of technical analysis to be educational. I try my bloody cotton socks off to make it educational for everybody, so yeah, cool. Then you can see that we've come in here and put in this nice roundy out bomb. Haven't had to wait for ages in terms of, you know, the pain of the markets. You know, when people talk about how you can go sideways instead of, like, you know, going down or up to sort of capitulate out of markets and whatever, there's two types of capitulation you'll hear people saying. One where you get big movements in price, one way or the other, and then the second type where you simply kind of go sideways for a while. Well, this would be type number 2 over here, in a sense, with this shallow movement, characterized as well by the complete decrease in volume on average across the board, all the way until such times as we got to the point where we were no longer wanting to do it. So there really is 3 phases in the market overall here, including then, you know, and this here point becomes a wedge. Okay, so we have this wedge on the go. You have to use the wick over there and cut through the body and blah blah blah, but essentially that's what this is overall here on this one. And then whenever eventually we moved outside of it, we moved into the third phase that this market has been in really ever overall, and that so far has actually been characterized partly by, of course, having achieved the measured move off the back of that wedge there. But what does it put us in here? It puts us into the third phase. Well, maybe maybe you could look at this in a slightly different way and say that this area over here in this chunk is the fourth phase, and that there was this third phase in between where we went through a little channel towards the top side. I'm going to just include this whole sort of this magnifying glass pattern here. I'm going to include the magnifying glass pattern here as just being the third movement in the markets that we've seen so far, and that's taken us up as high as really just, you know, our key area over there, which was the starting point of this wedge essentially. Now, of course, when you look at this and you see that we've had this downward movement, and it says, of course, a convergent wedge and a narrowing one, an acute one, whatever way you want to call it, then what you see here is that the movement from the measured move took us back up to the area that we started at, and this is obviously typical of a wedge which has got this sort of somewhat sort of, you know, almost 45 degree, but not quite, the sort of the 60 degree movement towards the downside. That's classic in terms of where you're going to expect to see that coming in at. And what that really means is that if you wanted to, you could then, instead of saying this is maybe 3 or 4 shifts in the market, that what you really have overall here is this one big phase that the market's been in this period where we saw the drop down in the volume through the sort of sideways second form of capitulation, where you simply just go sideways for a period of time, as I said earlier on, in this phase over here, putting you in with what could be conceivably a downward trend leading into an inverted head and shoulders type idea somewhere along the lines here, perhaps in there in that wedge. In fact, you could have made that debate with this being your neckline and that being your measured move is completely cooperative. Anyway, that's where we've been, right? And that's just a summary of where we've been. Where we are going next is a slightly different question, because you can see that there's this question mark here. We moved towards the top side in this channel, broke out of it, retested it, broke back down below it, came up again, moved towards the top side, down again, and this then results in this really wanting to be that fourth stage in the market. And the way I'm going to actually look at this right now is between the highs and lows No, actually, between this low here and this high, just as a starting point to put where we've come to into context, we've come down as low as the 886 and the 50 simple period moving average here, putting us in with, of course, asking questions about this trend. This is the 24-hour time frame. Where is the 200 simple moving average? It's nowhere to be seen. That's annoying that I'm on a chart that doesn't have that. Surely, has it not got more history than this? I'm pretty sure it has. Fuck's sake. That is the Binance one that I'm on already, right? Hit BTC then. Okay, so here we are in this dump. So yeah, how high up have we come since our highs over there? We're at the 236 currently. This is something that needs to be to be considered right now with regards to the overall macro picture and the trend. Where prices above $15 are taking out the 236, putting us in line for a potential move up towards the 616 in here at $20. So what you're looking for is to take out the 236 so that potentially we could come in here as a target towards the top side if that could be possible. What we have here is a chunk of price action which is really defined by having come up towards the top side in this wedge, pushed past the 200 simple, come down, found support at the 50, gone up, pushed up to 200 simple, come down, found support at the 50, and we've not managed to break outside of this zone yet. We're above the 50, which means that this is going to incline up the way. We're below the 200, which means this is going to decline down the way, descend, and that means that these things here are on, and have the possibility of having a golden cross at some point, and that would be very, 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 very good. But we are still under death cross conditions, and what we see after a death cross is so often that we go up and we test the 50. If you've watched the whole episode, you know where I'm going with this one. And then if you push past that point, finding support at the 50, you go on and test the 200. Now, of course, if you were to break past this point up towards the top side at this point, then you'd be able to say that we've definitely got a turnaround. If you fail to do so, then instead eyes get drawn back down towards the 50 again. And will you simply get a confirmation of this death cross by virtue of the touches here? So movements back down below this zone become very, very much negative for us, and that means we can draw in a couple of clear horizontal lines for us and build up a nice chart to revisit in the future. We know that this area down below is going to be significant, where we see our last wicks. We know that this area up above where we had our last body high close and that goes through those wicks, and actually let's just stick it in like that, is going to be super important towards the top side. That lines up nicely enough with the 236 moving average. Being below it looks down, being above the 382 looks up the way. And let's then start to wrap up this technical analysis in terms of where we are now and this movement towards the downside. So this has been all in 24-hour time frame. On the 4-hour time frame, you can see that there's going to be a question: are we in a downward trend or an upward trend or a sideways trend? Have we got a bull, a bear, or a kangaroo market on the go? This is a high here. This subsequent high closed lower than it. If I just actually establish that that's indeed the case here. Yes, indeed, this was a lower high. This is a low, and what do we have over here? We haven't quite closed lower than it. So the importance over here, the importance here at the minute is to define that we have this range that we're in. Really, essentially, this is the range. This can be defined quite easily as well with just the parallel channel, taking in those tops and bottoms here. If we take out these lows, we have lower lows and we're in a downward trend. Okay, so this is our sort of parallel channel, if you like, in terms of just looking at this in terms of support and resistance. There's various other ways we could be looking at this. One of them that I'm tempted to actually do as well, just to kind of fatten it all out a bit, is to stick on one of our friends, the pitchfork over here, coming from this low up to that high over there, down to this subsequent low, which was characterized with wicks, I do believe, in this area. And as you can see, really, well, although I do admit it's getting a bit difficult now, isn't it? That we've got this pitchfork here. If I just hide the parallel channel, it'll make it a bit easier to see. Gosh darn it. Gosh darn it. Right. As you can see here with this pitchfork, which is obviously fairly tempting to do. If we can push past these zones, we're going towards the top side. If we push past these zones, we could be going towards further lows, taking out that previous low over there. In terms of thinking about pitchforks, by the way, of course, there's the reason they were invented, where you take your low, your high, you draw between the 50% Fibonacci area, or well, maybe 50% Fibonacci, just simply 50-50. Draw a line through it. This is a an area where you can look for a reversion to the mean in terms of the oscillations of the price coming back towards a mean line in the middle. And of course, that's very, very important. But also in terms of looking at the overall kind of movements away beyond the previous areas of support and resistance, right? And the key areas in terms of the up and downs in the markets. And you can see quite clearly then that by going up past these zones and actually moving outside the width of this pitchfork would be putting us into an area where you could say that not are we coming in for a double top or for some sort of little shallower area, but we're actually moving on for the next trending move. Movements down past this zone would give you that feeling that we're going past that as well. So it's beyond, it's more, it has more to do with simply your relationship to the extended future sort of comparison point of that 50% area with relation to your up and down move. Okay, it's more than just that, and we're looking at the overall trend as well with regards to that pitchfork. That's why I've got it on there, and that's why I was tempted to draw it as well, because naturally that comprises of that information. Now this is just your standard one, or this is Schiff. I prefer Schiff. This is just your standard Schiff pitchfork. There are other ones that you could be drawing now, and this one here might have a touch of relevancy to people in terms of the inside. If we actually see pushings down past these points, I wouldn't like to see anything going down past $12. Okay, if we're going to look for movements outside of that zone, anything up past these areas, I would say that you'd be looking for you'd be looking and asking questions about the pullback then once you got up towards that $20 zone, as we spoke about already in terms of a target towards the top size, $20. There you go. That's where the 618 is coming in at and everything. There you go. That would be your technical analysis on that one. You could go down, you could keep going down, you could keep going down the time frames. I mean, let me know if you think that was interesting, right? Move on to uni. Move on to uni. Move on to uni. I did uni already, by the way, Shivam. I already did it. I already did it, my friend. Did you not see it? Did you not see when we did uni? I already did uni. I did the gosh darn uni already, man.